Hi there, I'm Radhika Bajaj. Now, are you tempted to sell your mutual funds in the current downfall of the market? If that thought has crossed your mind, keep watching to understand the right strategy for selling a mutual fund. But before moving on, please hit the subscribe button because we post quality content on personal finance and investing every week and you don't want to miss out. In this video, we will cover why well bought is half sold, what are the wrong reasons to sell mutual funds, and what are the right reasons to sell them. So let's get started. As you know, there is so much information on the internet on how to choose a mutual fund and which mutual fund to buy, but you will find actually very little information on when to exit a mutual fund investment. You know, there is a saying that goes, well bought is half sold. And that means if you buy something at the right price, half of your problem is already solved. This applies to mutual funds as well. For example, if you've bought a fund during the peak of a bull run, it would mean that the per unit price of each share in the fund is on the higher side. Now, this means that returns may not be that great since you're already buying it a bit expensive. So the point is to think about pricing before you commit yourself to a mutual fund. Now let's look at some of the wrong reasons for selling mutual funds, and most of them have to do with being too emotional and not thinking logically, which is what you should be doing. It could also be that you're reacting to the market environment. For example, if the market is at an all-time high, you could think you've earned a significant profit on the mutual fund and that it would be in your best interest to exit the market. You might be highly tempted to actually book a profit. However, you should simply ask yourself, what was the main motive for investing in this mutual fund? Has your financial goal been achieved? And do you know what you're going to do with the cash that you get after selling? Now, if you don't have good answers for these questions, do not exit your investment. Similarly, let's say the market is at an all-time low. Again, here you may be highly tempted to encash your mutual funds during this rough patch in the market. But before you do that, you should check on the fund's historical returns and how many times it has bounced back from such lows. Of course, it's not necessary that history will repeat itself, but if a fund has bounced back multiple times, you can have confidence that it will do just that again only if you are patient and you can wait. Another reason that you may think about selling is if the fund is performing below its peers. At times, you may get nervous reading headlines that the fund you're investing in is doing poorly while other similar funds are flying high in the market. You could be tempted to exit your position and buy the funds that are actually doing really well. However, take a moment and ponder over the reason why you chose this fund in the first place. There might be a time in the future when other funds are not doing so great and your fund is actually performing much better. Moreover, each fund manager, each investing strategy is unique. It's different. All of them go through periods of good and bad times. To get the best out of any fund is to do a thorough due diligence before buying so that during bad times you are not in a state of panic. However, due diligence should be actually a regular part of your investment process even after you've bought. One more poor reason to sell is market timing. You are aware that timing the market is difficult. You might be tempted to sell at a higher valuation and buy back at a lower valuation. However, it is not necessary that it will always work out that way in the market. It works best only in hindsight. So if you can get past the wrong reasons to sell, half the battle has already been won by you. Now let's jump into learning when it actually makes absolute sense to sell mutual fund investments. It is advisable to have a financial goal before you start investing. Now, if your fund delivers your financial goal, you could certainly look at selling and moving to less risky options like a debt fund. So the most logical reason to exit a mutual fund investment is that it has served its purpose. You could also look at exiting a fund if you are rebalancing your portfolio. In case there is a change in your strategy of asset allocation, you would want to revisit your existing holdings and reduce your holding in some sectors. For example, you want to invest more in the tech sector since it's in a growth phase, but you're already heavily invested in real estate mutual funds. In such a case, you will of course need to rebalance your portfolio and also sometimes to reduce exposure in sectors where you may have invested too much. Now, as an investor, of course, it can be worrying to see your fund performing poorly consistently when similar funds are growing. This could be actually a cue to revisit the reasons why you bought the fund in the first place. And if you see a shift in the fundamentals, it might be the right time to switch to another fund. So sell your mutual fund only after you have clearly understood why it is not giving you the returns you had expected when you invested. A financial emergency of any kind is another reason to exit your mutual fund investment. If you are in an emergency and your emergency corpus is not enough for your current needs, of course you can look at exiting from your current mutual fund, and you can resume it at any time once you have sailed through a difficult patch in your life. Patience, remember, is the most important attribute needed in investments, and especially when there are sharp dips in the market. However, it is important to check your emotions and not get carried away by the buzz in the markets on a particular day. Stay on your path to achieving your financial dreams. Hopefully, this video has helped you. Leave us a comment if it has. Happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.